How's it going, everybody? KCG Trades here, and last week was a pretty rough week. As per IBD, we are officially in a market correction. We did have a little relief rally on Friday, but it was on lower volume. So essentially, the real question is, where do we go from here? As active traders, our job is to take advantage of strong uptrends and rallies, and when the market isn't showing that, that's when we take a step back, sit out of the market, stay in cash, and wait for the next leg up. Now that the market is in a correction, what we have to do is build our watch list, find stocks that are showing great relative strength, those basketballs underwater, those stocks that are resisting the decline while the overall market is declining, because when the market is ready to rip again, those stocks are usually the ones to lead the way. So for me right now, what I'm doing is building my watch list, but also paying attention to the market, seeing how it's going to act in the next few days, see if we get a real follow-through day or if we're just going to continue rolling over. But for now, it's just a waiting game. I'm sitting out. I'm not in the market. I'm 100% cash, but I'm ready to be aggressive as soon as the market gives me the opportunity to. So these are the times you really want to pay attention to the market and not really go on vacation. These are the times that real money is made, and you just have to be prepared for it. So what I'll be doing is going through the same motions I've been going through every week, looking at the overall market, looking at some signals, looking at some indicators to see where we are overall, as well as show you guys my watch list that I'm building to look out for when the market turns up again to possibly go long. This week I'm not really looking to buy any positions unless the market really gives us an opportunity to, but for now, like I mentioned, I'm just building my watch list and taking note of all the stocks showing great relative strength. So let's go ahead and start with the Nasdaq composite. I have it pulled up on my screen here. And if we take a look for the month of September, starting September 1st all the way till September 30th, it was basically just a straight pullback, very similar to what we had last year. If we take a look at September 2021, September started here, and the whole month we kind of just went down, had a low rally towards the beginning of October and pulled back again towards November, and then just rallied towards the end of the year. So this is definitely a possibility once again. Obviously we don't know, but September, basically seasonality, usually tends to pull back during the year and then rip towards the end of the year. Exact same thing we had happen this year. So that's something to definitely pay attention to. Right now we're below the 10, 21, and 50-day moving average. We're above the 200-day moving average, but who knows, we could definitely pull back even some more and hit that. For now, like I said, it's just a waiting game. In terms of the S&P 500, same thing, below the 10, 21, 50-day moving average. We are flagging here, but we are still in no man's land, so not much to do but be patient. If we take a look at the Dow Jones, we broke out into all-time highs, but since then have just been correcting, and since September 1st, same thing, just been pulling back. We had a little nicer rally compared to the S&P and Nasdaq, but then we just pulled back. We didn't undercut the lows here though. In the Nasdaq and S&P, September 20th lows got undercut. If we see here, these lows did not get undercut last week, but if we take a look at the Nasdaq, these lows got undercutted, as well as these lows got undercutted. So that's something to definitely pay attention to. Maybe the Dow Jones has some more strength compared to the S&P and Nasdaq, who knows. And if we take a look at the IBD 50 here, we see September 23rd we hit all-time highs, which was great, as the growth stocks have been rallying since August pretty much. But the last week of September we took a pretty big hit. Growth stocks took a pretty big hit, and we went from all-time highs to really touching the 200-day moving average in just 6 sessions, which is quite crazy. So we are a bit oversold in growth stock territory, but it doesn't mean we're going to rally from here. It could just mean some small, maybe a dead cat bounce, who knows, but we'll see how it goes. It did bounce nicely off the 200-day moving average, had a nice candle that could be the start of a possible rally or start of a reversal, but for now we just have to wait and see. We don't want to rush into stocks because this could be just a dead cat bounce, as like I said, or it could be just a very weak rally, and you don't want to get stuck in a weak rally because more prone to just falling over and continuing lower. If we take a look at the IWO, still same thing that's been going on for quite some time, just continuously going sideways, just consolidating, and we are still below all the moving averages, so nothing much to see here. We did have huge volume on Friday, which is encouraging to see compared to the overall indexes. It was on lower volume, the Friday rally, so that's something to pay attention to. And we also didn't undercut the lows on September 20th, so that's another thing to pay attention to. If we take a look at the IWM, this is actually the strongest out of all the bunches, the Russell 2000, so maybe small caps we'll have a year-end rally, as we didn't even come close to undercutting this lows, and we are still above the 200-day moving average, and we actually closed above all the moving averages. We closed above the 20, 10, 50, 200, of course. So that's something to pay attention to. Maybe the small caps will finally get some love in the year 2021 to finish up the year, but as of now, we just have to be patient. If we take a look at the VIX here, 2 weeks ago, September 20th, at first low, we had a huge move up, and as we know, that's usually a sign of a short-term bottom. Came down, had a nice little rally, but since then we're moving up again. Friday, we started off really high and came back lower, so volatility is still volatile right now, so not the time you really want to be aggressive in the market. And if you take a look at the ARK ETF, we undercut the September 20 lows pretty badly, pretty low here, so ARK in no man's land here, below all moving averages, something to stay away from. So these are just the overall indexes, ETFs that I like to look at right now. Just a waiting game, no man's land, not much to do. And if we take a look at the fear and greed index, let's take a look at that. So taking a look here, it looks like the fear and greed index is currently at a 27. Thursday's close brought us up to extreme fear levels at 25, but Friday's rally obviously made investors feel a little better, bringing us back up to 27. So not extreme fear anymore. If we take a look at market volatility, it does show that the neutral reading means that the market risks appear low. So since this volatility is at a neutral level, it is possible we could get a nice little rally from here, but obviously who knows, this is just one indicator, and everything else in terms of breadth, momentum, put and call options are all in extreme fear levels. So this is definitely something to pay attention to. When things are all at extreme fear levels, it's usually a time to be more optimistic. When everything's fearful, you want to be a little greedy, and when everyone's greedy, you want to be a little fearful. As we all know, the famous Warren Buffett said that. So this is definitely something to pay attention to. Obviously, it doesn't mean just go buy right now. We obviously want to wait for the right setups and the right opportunities, but this is definitely a step in the right direction for us to possibly get a new leg up and turn back up into an uptrend. So with that being said, that's the overall market indicators that I take a look at. Now I want to show you guys my watch list and stocks that I'm watching that are showing great relative strength. And the first one I'm watching is Airbnb. So if you take a look here, the past few months have been great. Had a nice little breakout to 176, and then for the past week and a half, it has pulled back, but it pulled back very nicely and on very low volume, pulled back to the 21 EMA in a controlled fashion. Friday with the rally, we did have a nice breakout above this little bull flag here, this little wedge to the 21 EMA. Had a nice gap up, came down a bit, but then closed at the highs of the day around 173 on better volume than what we saw during the 4 pullback days. So that's very encouraging to see. It also closed back above the 10 EMA, while the overall market is below the 50-day moving average. So this is definitely showing great signs of relative strength, something to pay attention to when the market turns up again. The next stock is AFRM, a fan favorite right now. Everyone's paying attention to this as it had the 2 strong gap ups and now starting to consolidate. It did try to break out into all-time highs but closed back below it, and the past few days have just been consolidating. But we do see here a double inside day, Thursday and Friday, which is very significant due to the fact that the market had a pretty big drawdown on Thursday. So the fact that this had actually a green day on Thursday and Friday kind of just went neutral, didn't do much, had another inside day, shows that people aren't selling this stock, and this could be ready to rip again once the market gets ready. Next stock I'm watching is APPS. So Digital Turbine has been showing signs of resilience recently. We see these 2 twin tower volume days is very encouraging, and we recently broke out of this $65 consolidation on strong volume, rallied for a few days, and with the overall market pulling back, this pulled back this stock as well, but we did it in a controlled fashion. The pullback days were a bit higher volume than the other days recently, but not completely discouraging because we did reclaim the 10 EMA on Friday, although it was on smaller volume. Definitely want to pay attention to, especially if we could stay above the 10 EMA, as the overall market, like we said, is below the 50-day moving average, but it definitely shows that from 47.57 all the way to 76 that this definitely wants to continue going higher, especially while the market is acting kind of weak. So the next stock I'm watching is ATKR. This one is just to pay attention to if it could stay above the 50-day moving average. We did break out into the $100 level, new all-time highs, and then pulled back 3 days in a row on a little bit higher volume. If one day was on lower volume, And then Friday, we found support off the 50-day moving average, similar to what we did on September 20th. We didn't undercut the September 20 lows, which is a good sign as well. So moving forward, just want to see if it could build above this 50-day moving average, stay above this downtrend line here, and see how it moves if it could reclaim the 10 and 21 EMA. One to pay attention to as well. The next stock is CELH, Celsius Holdings. As of right now, there hasn't been any real significant drawdown to this as of late. We did have a big down day on kind of big volume on September 27th, but we are still above the 21-day moving average, and we reclaimed the 10 EMA as well on Friday's rally. So for now, I wouldn't be surprised to see this just continue to consolidate as the market figures itself out, and then maybe when the market turns up again, this will rip back above 100. This is just something I'm assuming, but definitely one to watch for relative strength. The next stock is CF Industries Holdings. Huge breakout on Friday on tremendous volume, 7.62 million shares traded, and it had a huge day. The whole day just continued going higher, closed at the highs of the day as well. So this is definitely something to pay attention to in terms of relative strength. We did have a strong rally from 43 all the way to 61.26, so it may be due for some sort of consolidation, some sort of pullback. But like I said, we're not looking to buy anything as of now. We're just looking for stocks showing relative strength. CF is definitely one that is showing relative strength, and it just recently broke out of this huge consolidation, this cup with no handle, above 56 on strong volume. So it shows that this stock is breaking out during a market correction. So once the market continues to show strength, this is definitely one to watch for a continued move higher. If we take a look at the weekly chart, beautiful breakout. So next stock I'm watching is Datadog. Though Datadog has been acting very well here, we recently broke out of this ascending triangle and just riding along the 10 EMA, and then we broke down below, fell below the 10 and 21 EMA, but we retested this ascending triangle breakout here, and we held. And the past 3 days, Wednesday, Thursday, Friday, we had a nice rally reclaiming the 10 EMA, and on Friday had decent volume. This was impressive because Thursday we had a nice little rally while the overall market fell pretty hard. So this is definitely one to pay attention to if it could continue its strength, continue to hold these this 138 to 139, 140 level, stay above the overall 10 and 21 EMAs while the overall market just figures itself out. This is definitely one to watch for relative strength. The next stock I'm watching is DOCN, Digital Ocean Holdings, and they look pretty good for a possible long entry for a short-term trade here if the market can give us a little rally to start the week. We are still kind of wedging across the 10 and 21 EMAs here. So the 21 EMA found some support on Wednesday and Thursday. Thursday we had a nice inside day, and Friday we broke back above it, reclaimed the 10 EMA, and looking to get out of this little downtrend line here. Friday was better volume than the few pullback days, so that's encouraging to see. And overall, this is just a clean looking chart, nice little uptrend, and now we're just flagging and looking to continue this uptrend off a bounce of the 21 EMA. Kind of actually had a holy grail setup, so that's actually great news. So this is definitely something I'm really watching, especially if we could get above this downtrend line here. With Friday's nice candle, after undercutting the 21 EMA and reclaiming it, I definitely believe this one wants to go higher as long as the market can cooperate. So definitely on my list of stocks I'm paying attention to. The next stock I'm watching is very similar, DOCS instead of DOCN, Doximity. We take a look here. It is wedging off the 50-day moving average. It is a newer IPO, so the 50-day moving average just came across here, and it's wedging beautifully towards the 50-day moving average. Obviously, because the market's still in correction, we don't want to just go long from here, but we would want to see institutions basically support the stock at these levels. If it can, that would be very encouraging, and it would be a very low-risk entry to get in eventually. But for now, like we said, we just have to wait and see. But this is wedging very nicely here, and I would definitely be interested for a long opportunity if we could get a good rally on some good volume. One to pay attention to for sure. And the next stock I'm watching and paying attention to is GLBE, Global E Online. Take a look here. For the month of September, it's pretty much just gone sideways across the 50-day moving average. So we do see here the 50-day moving average is showing signs of institutional support because the overall market for the whole month of September is pretty much just gone downwards, while this has just gone downwards a little bit, but also pretty much going sideways, drifting higher as we hold the 50-day moving average. And the past few days the action has been very tight as the overall market has been very volatile. volatile, so that's something to definitely pay attention to. Obviously right now it's just going sideways, not doing much, but the fact that it is going sideways while the market's going down is definitely signs of relative strength. So something to pay attention to if it could continue this momentum and eventually break out above this 77 level into all-time highs above the 83, 84 levels in the near future. And the next stock is LC. If we take a look here, it has been flagging nicely here. It's still above this overall power earnings gap up, which is great to see. It's just been drifting higher, and now it's just kind of digesting its gains in a very controlled manner. We did find support off the 50-day moving average that we hit on September 29th. We did not undercut the September 20 lows, which is another good sign here. We found support of the 50-day moving average. Thursday we had a good rally while the overall market fell as well, so that's another sign of relative strength to pay attention to. Friday we didn't do much, and now we are just at this downtrend line here. So we want to see in the near future a possible breakout above this downtrend line here on strong volume and reclaiming the 10 and 21 EMA. As we see right now, it's just congested within it. We want to see a breakout above it and create some separation. So that's what I'm watching with LC. And the next stock with showing great signs of relative strength is SBLK. If we take a look here, just broke out, had the highest close ever on Friday on very good volume, above average volume, 2.62 million shares traded, and had a nice breakout. As we see, if you take a look at the weekly chart, just broke out, close at highest close ever, like I just mentioned, and it does look very well. It's above the 10, 21, 50-day moving averages. When it did gap down on September 20th, it did undercut the 50-day moving average, but reclaimed it pretty quickly, reclaimed the 10 and 21 EMAs, and then closed at all-time highs. So definitely want to pay attention to. This has been consolidating since April of 2021, so about 4 or 5 months now, so it does look ready to rip even higher. And the next stock I'm watching is Skin, another stock that's showing great signs of relative strength here. The 21 EMA, this pink line here, has been showing great signs of support. We have two nice hammer candles on Thursday and Friday. The volume is a little bit weary because we did have huge volume September 9th. We also had huge volume September 17th, big red volume. So this is definitely one to just pay attention to, but the fact that it is showing support off the 21 EMA is very encouraging. It is kind of just consolidating here, but the two hammer candles is encouraging. If we could get some follow through above the 10 EMA, above this hammer candle, possibly retest these 28s in the near future, that would be very, very encouraging as the market comes out of this correction. The next stock is Snapchat. Although this has been very frustrating as of late, had a beautiful breakout above this downtrend line here, September 20th, 21st, just rallied to 83, but then the next five sessions just crashed down. It wasn't on huge volume though, so that's encouraging to see. But the fact that it broke down from all-time highs all the way below the 50-day moving average was kind of discouraging, especially because of all the patience we had to have holding it throughout these times. But now we do have a little bit of a power of 3 setup here. See if it could break above this 10 EMA, 21 EMA, 50-day moving average to continue higher. It's still doing better than majority of stocks as it's above its 50-day moving average, and it still held this power earnings gap up here. If we take a look here, it did undercut it many times, but as of right now we are above it, and every time we came below it, we came back pretty quickly. So definitely another one to pay attention to. So the next stock I'm paying attention to would be Tesla. If we take a look here, it has been acting very well for the past few months. Have a lot of lines here because this is something I've been actively trading. But recently it has been showing great signs of relative strength. As we see here, I have a triangle drawn, and the past 5 sessions have just been going sideways essentially while the overall market kind of pulled back very heavily. It is above the 10 EMA, and it's kind of doing this stair-step method where going up, going sideways, going up, going sideways, going up, going sideways. So that's very healthy, very strong action, especially while the overall market is falling. So Tesla is showing great signs of relative strength, and as we know, Cathie Wood is an extreme bull of Tesla, giving it a price target of 3,000 still to this day. So definitely one to watch because of how strong this has been acting. Over the weekend, I do believe Tesla did announce how many deliveries they had, and they blew their deliveries out the water. So definitely a very strong company, very strong stock with a strong leader, as we all know, Elon Musk. But definitely want to pay attention to because Tesla definitely seems like it wants to rip higher. The next stock is UPST. Obviously, it's had over 100% gain since its earnings gap up from 164 all the way to 346. Now it's kind of just flagging. It did flag to the 21 EMA, but now because of its huge gain, it is probably time to just base out a bit. So this is not a buy signal, buy entry, anything like that, because it's flagging right now. It definitely needs more time to base, and I definitely do believe a bigger pullback would be on its way. But a new base is very encouraging, because a new base gets us ready for a new leg up. So if this could base, possibly get a new leg up, get a new cup with handle, something like that. Definitely one to watch in the long future, near future. In the future is definitely one to watch. And the last stock I'm watching that's on my list of relative strength is ZIM. All right, so ZIM doesn't have the best of the best relative strength, but the reason that this is on my list is because, one, it recently broke out of the $50 breakout level, rallied higher, and now it's just wedging back to the 50-day moving average, but it also coincides with the retest level of the recent breakout of $50. So we hit this level, bounced off the 50-day moving average, and bounced off the retest breakout level. So now that previous resistance turns into new support. That's exactly what you want to see with stocks. Obviously, it could still continue lower, but I do like the action that is showing so far. If it could continue this way and bounce off these levels, that would be very encouraging, and that's something to pay attention to. But besides that, that's pretty much my list that I'm watching. That's the watch list I currently built up. I'm definitely still going to scan for more stocks. If any more are showing relative strength, please leave them in the comments down below if I missed any. I hope you guys enjoyed this video. If you haven't already, leave a thumbs up, subscribe, share with your friends and family, and make sure to protect your mental capital. It's very important during bear markets, during market corrections, that the most important thing to do is protect your mental capital, but also your regular capital. Don't drain yourself trying to buy stocks that are just moving up a little bit. Wait for the overall market to get out of this correction, go back into an uptrend, and make easy money. Right now, it's very hard to make money, and we don't want to stress ourselves out by chasing pennies when we could chase dollars later on. So that's pretty much for this week. Hope you guys have a wonderful, wonderful week. 3 months left into the year, a new quarter. Let's end it off strong, and thanks for watching. Have a great one. Take care.